Welcome to part two for this weekend's technical analysis videos. The first one, it was only on silver, multiple time frames. This one will be on the gold to silver ratio, so ignore this XGD. It's supposed to be XAG, but that's how it is. Anyway, it's a 46-hour chart, which brings us back to this significant low, this significant high. This was the low when silver and gold reached their highs in February. This was a summertime where gold and silver bottomed, and then a significant down correction giving back 61.8% of this entire up move. This area here was not support. It was resistance on two different occasions. The first occasion occurred in here after it barely broke down below the first time. An area originally would have looked at support. When it was down here, would have been switched to resistance as it was. Boom in here. So this was after a significant down move, after significant sideways consolidation and a rally. It found resistance at that level again, but it did not find 61.8% from point A to point B. I can just look at that because it's pretty much there. I think 61% is somewhere around here. Not looking the best if you're predicting or wanting this to go towards the upside. When we switch this to a more longer term chart, so it's 2008, which we would need a 304-hour time frame, you have this significant high, which was when silver was 8.5, gold was 700, and this low when gold was, I'm gonna guess, around 1,500 and silver about 50, or 50 times 30, yeah, 1,500 or so, maybe 1,550. And of course, at that point, you had this fast move up to 61.8. Now notice with this upper and lower band, when I see bands going down together, that's a bull market. If they go up together, bear market when they go down together, bull market when they go up together. This one didn't go up together because this one went down, tried to go up here, but just went sideways now because it's been having this resistance that it is unable to break below. On the previous chart, it was looking as if it was now going to at least make a test of this level, probably break through it. Therefore, it looks as if that we may be testing some mid-40s area very soon in the gold to silver ratio. When it's in the middle of these fib bands, that neutrality means it's pretty much a bunch of nonsense until you have a clear break above here or a clear break down below there. That would be it right now for the gold to silver ratio. Let's move on to platinum, and we'll start with the daily chart. And nice little breakout yesterday after it established this higher high. Now another higher highs in play. There's the higher low. But what's an interesting thing about this chart is the Fibonacci analysis. I mean, there's headaches. So, okay, I want to buy here, you lose. And now it's resistance. So there's a good hit, okay. And you see this thing breaking down here. And wait a second here. Why is it not coming down towards there? You're back up to this top. So after having a whole hard time holding this level up here, it didn't break down, showing signs of what's like a failed move even. If you look at this again, you can pretty much see signs of this being a left head, or left shoulder, excuse me, your head, the right shoulder, the inverted head and shoulders pattern. If we go with the breakout and the distance of the pattern, we can make a somewhere like that, which will give us a price objective up to about 1660 as a possibility. But it has been holding this rally so far. The rally didn't break below here. It has to have a clear break below this level here for it to be a failed rally. If, of course, you see this thing, what you'd want to see happen is maybe a resistance or support test in here, then do something like this, and then you'd have a confirmed bull market again in platinum. Let's move this on to the 4-day chart now, and we'll take a look at this significant high and low. All the metals have similar weekly looking charts, so just like the rest of them, big resistance is found at this level. What would be ideal again would be a move up here, maybe a small retracement, move up towards here, back, and then that's always the ideal way for me though. Okay, so that's platinum. Let's now move on to oil, and right now I think this is a nonsense traded chart, even though it's not in the neutrality range. This is from the 2008 highs and lows after this thing had a pretty much complete free fall. However, you pretty much got what we call this symmetrical triangle, and it's closing in the middle part of it, which I need to see either a clear break below really 80 to 75, or a clear breakout above this 110-ish area. As long as it's in this range, it's neutral. If you look at this, you can see these bands. Well, these bands are down like that, so would that not be a negative bias? And yes, but I could also make a case that these are in an upward trend within the bands. I also could take the original trend line that I drew in and then draw a symmetrical trend line, and well, there's the upward bias towards it. It'd stand within the trend. However, you want to do it with pierces above it kind of deal. So that's oil. We're going to take a look at Dow now, the Dow Jones daily chart. Now, what's interesting to note about the Dow is we have this thing called a fiscal cliff, and we have this debt ceiling coming into play. We're also finishing off the date of November. The date should be reading the 23rd. However, with that being said, we have situations where the stock market's probably going to go down. Now, what about gold, silver, and all the other stuff? Well, when the issues are fiscal cliff and debt ceiling, it's possible they go the opposite direction. Last year, when it was the debt ceiling issue of 2011, stock markets was going down and gold and silver were going higher. So this is something to keep in mind. With that being said, on the daily chart, there was no resistance found at the 38.2% level. So, the things you are looking for, is this going to be that big failed breakout above it? And if that's the case, then you'd probably see it go well below here in the next early session on Monday, Tuesday, Wednesday. Probably not. Is this area going to be support? Are we going to have a fast move up to this area? Because it's already high enough where it's not a pierce above anymore. I think once you get to around here, the pierces are no longer in play. So therefore, as far as the play is concerned, this is the short play. It must not retrace more than 58%. What does that mean? It must not go lower by more than 58% from this low to whatever the high happens to be. So as long as it does that, meaning it doesn't even come that close to a 61.8% retracement, then I'm going to be looking for a rally for 13,200, which is right here at that fib level. That's an area that you would put a stop in at 13,325 and a profit at 12,915. 13,325 would be above this high, and then the stop is right at this line. If the price gets less than 13,000 after your entry, then the 69% retracement would be the new stop. What that means is you come in here, it's starting to go down, so now it's below 13,000. Once it rallies 69% from whatever this high would be and whatever this low would be your exit point. So that's that, and we'll quickly take a look at gold on a free hand, because a lot of times what I talk about on here is like the game where both teams have a play like chess. You have your bulls got to turn, and the bears, the bulls, the bears, and so on and so forth. Well, that's what I've done with gold, is I've drawn a freehand chart, something like this. I don't got the variables at the bottom. I don't have the levels, prices on each of the axes, basically. This is a 2008 low, and so this is 700 here. This is 1920. $1,920, that is. But again, you can see how this sideways correction has been pretty much a savior for people who are trying to get into gold but don't want to pay the highest prices because of this sideways correction. Okay, so final thing is 2 more setups. I'm not going to show you the charts. Again, do your own due diligence if you do any of these plays, because it's a casino game. If it's something you want to play, then all risks associated, of course, you are doing. EQ2, EQT. You can take a look at the chart, maybe pause this, look at the chart, then now I'll talk about this. It can't break higher than 6360. That's a must not. It must not break higher than 6360. It must retrace 38.2% from the $58.09 low for entry. And you can read the rest of it there. DF, which is Dean Foods, a short play. It must not surpass 1975 and stay below 2004. And it must reach 2005 for a short entry. And those are the rest of the details in here. If they get executed, I'll explain them more later on, but they very well may not. So thank you for tuning in, and have yourself a magnificent week. Bye-bye.